Hello, and thank you for spending a few minutes with us today as we discuss the post-election landscape and what this means for you. I'm Joe James, one of the founders of Coker James, currently serving as CEO and managing principal. Joining me today is Donna Briggs, CFO and a principal at Coker James. Also joining us is Scott Wallach, a financial planning consultant with our strategic wealth management and financial planning partner, HK Financial Services. We've partnered with HK to bring holistic financial planning to our clients. For you, that means despite bear or bull markets, presidential elections, natural disasters, or pandemics, we focus on what matters most to our clients. Then we build a financial plan that incorporates tax strategies, estate plans, business success planning, risk management, retirement planning, and more. The recurring theme throughout our discussion today is when it comes to politics versus planning, planning always wins. Together, our team can model and plan for changing environments, future uncertainties, and pivotal life changes to help you reach your long-term financial goal. With that, let's get started with the current post-election landscape. Scott, would you please give us your thoughts on where we stand right now and what's going on in Washington?
Thanks, Joe, and appreciate the introduction there. And those who are watching this, very much thank you for your time today. The current state, as we sit here today, is we're currently awaiting the final counts here and everything to be ended. But our projected president-elect Joe Biden will be taking over the leadership piece there. Ultimately, the House will remain Democratic as it appears to be, and then the Senate will be finalized in January, as it sounds, there in the great state of Georgia with the runoff happening. So with that happening, we'll see where the balance of the government plans. A lot of clients are asking questions about this. What happens? What happens if a certain party takes office or whatnot there? And the jury's out. We still need to see how that all finalizes out. But Joe, as you said, planning always wins. And right now we're working with clients together to continue to focus on, hey, what's your short and long-term plans here with the ability to make adjustments. And that's where we'll be heading here shortly as we get to learn more about where the balance of the government will be. So as we look at that, a lot of times clients are saying, well, how does this impact my financial future? And I wanted to ask Donna for her thoughts initially before we talk about a few technical topics there today. Donna?
Thank you, Scott. I had hoped that in November we would be having a fabulous discussion with a great deal of certainty. Mm-hmm. And we find ourselves in a place where year-end planning is got a lot of uncertainty. And I think we can make some reasonable expectations about what's going to happen in 2021. And I think most tax professionals are having to make some of these general statements. But you're right, planning is paramount. It's a very fluid situation. And the political part of this is so critical because, as you know, all tax legislation starts in the House. And if a president has the desires and the House has a desire to have a real broad sweeping tax change, the Senate has to also agree with that bill. So you've got to have a Senate that goes along with it. That's the critical importance of who controls the Senate. And I think you would agree that the markets have loved the fact that we expect the Senate to remain under Republican control. So if that's the case, you have a great deal of balance. And we're going to talk about some of Joe Biden's political platform in the tax and financial planning arena. And knowing that if the January runoff yields a Senate that's controlled by Republicans, you're going to have a situation where there's going to be compromise. So some of these things, the spirit of this will probably be there, but it might be tempered a little with that compromise. So with all that being said, let's talk about Joe Biden's tax platform and some of the things that was published. These things were published during the election campaigning. And just so you know, you probably saw a lot of summaries and memes and brief articles when the campaign was going on. And that's because that's precisely what's given during a campaign. These ideas are not fully developed. They don't have a great deal of detail. They are merely talking points. And so we've set some expectation as to what that will be, historically speaking, of how those would develop into law. And here's a great illustration of what you might see as a individual tax rate change. Joe Biden's platform showed the rate structure changing and the tax rates increasing. I think it goes without saying that no matter what party is in power in 2021 and 22, you're going to see a lift in tax rates. It's just how extreme and when. So I love that 2022 question mark, because it could be 2021, 22. And so there's where the uncertainty is. But in general, we expect tax rates to go up. Next slide shows an illustration of the fact that we also expect capital gain rates and dividend rates to rise. So this is a big deal, because there's a great deal of planning and financial planning around tax efficient investments. And wow, this would change the landscape of how we do some of that planning. So this is really a critical thing to keep an eye on. And it affects markets, it affects individuals' hunger to actually invest. So tentacles run deep on this stuff. In addition to this, we have potential increases in the FICA wage cap. Those for high income earners those limits could come off completely. And that's another big planning issue in your business, with your compensation, with your retirement plan strategy. So all these things are a paradigm shift in the way we think and the way we plan. There are estate and gift proposed changes. And in addition to those, there are changes even to the new C Corp tax rates, which everybody agreed during the Trump administration, these made us competitive in the world markets. And now we have a proposed lift in those rates, and that's illustrated here on this slide. The Biden proposal is a 7% increase in the corporate tax rate. And gosh, even in my mind, that opens up questions again of entity type choice. Should you be a C Corp or an S Corp or partnership? All those things kind of shook out, and the dust settled on those, that they were kind of a push under the Trump tax rates. But those could shift again. They could shift differently in the future. So all these things are moving parts. And to be honest, we just, we don't know what we don't know. But I think we anticipate these things happening. And the question is, how quickly and how much? Scott, with all these things going on, like how do you integrate this into long-term planning? I know that's where your strategy is. And you know, I hear people say, I've got to do all these things in December right now. I got to fix this. You know, is that really the course for long-term planning?
Yeah, exactly. The course of long-term planning is not to hurry up and just get it all done at once. We got to be looking at the laws, be reacting quickly, obviously, and then ultimately putting these changes into place. And, you know, throughout this whole election season, I've read and attended other webinars like this and listened to other gurus out there. And the common theme that you hear throughout is don't let the short-term political changes and laws just completely take your plan out of place. If that leads the plan, that's going to create probably more issues down the road. So at the end of the day, the word proactive comes to mind. Being proactive as we learn about what types of strategies are coming into play, what types of law changes are going to happen here. So to your question there, Donna, we've got to be diligent about quickly understanding, okay, what's going to be put through Washington to ultimately become the laws in the future. Some of those changes may happen, some may not. We all have different views, and that's okay. With the economy recovering and different things there, I think we're going to have a little bit more lead time on this. I think folks were quickly to rush to say we're going to have a big change happen all of a sudden. I think it's going to be a gradual type process there when laws coming into play. I could be wrong too. Anytime you try to project something, you always have a chance of being wrong. So at the end of the day, but planning is, and we talk about planning, what it comes down to is just really making sure that we know exactly the client situation. You've got to have good information. One of the topics that we have underneath all this that you just talked about, Donna, was just we call income tax bracket management. That's a long-winded phrase there, but ultimately what it means is let's see what bracket you're in currently and then possibly in the future, and then look at what changes we could possibly make. If business owners are watching this webinar, a lot of times let's take a good hard look at your retirement plan. That often is not being used to the most efficient way. And if that's a question mark, that's where we can help take a look at those things. Can you get bigger deductions for the business owners, and are you maximizing your retirement plan? I think that's going to be a huge focus right there. Again, pending what the laws look like in the future as well. So when we know where somebody is in an income tax area, what can we do to bring that down to either keep them in that specific bracket or try to ultimately go down even lower? So if that's through retirement contributions, charitable contributions, looking at investments, looking at ways to be more efficient in that area. I see a lot of different things often where we could put income bearing type instruments into different vehicles. So the client isn't getting taxed as heavily on their tax return there. So those are, as we look at that, tax bracket management is going to be huge. Looking at that, like you showed on the screens there, Donna, the capital gains rates, the dividend rates, all those types of things we're going to be having to look at there. The second point on the screen there, Roth IRA conversions, that is coming up a lot right now. A lot of clients are asking about if tax rates are going to continue to go up in the future. I'm nervous that I may be nearing retirement or in retirement, and my distributions that I'm required to take out of my IRAs and retirement accounts is just going to continue to get taxed heavily. Well, let's take a look at that. Now may be an opportunity to, if we're going to be in a lower tax environment, to convert money to a Roth IRA. That's a longer discussion for what we have today, but ultimately to move money into a Roth so you'll never be taxed on it again. And there's a lot of mechanics behind that to work through, but ultimately it comes back to where you are in the tax bracket. An example is I'm working with clients right now saying if somebody's still in a lower tax bracket, how much can we squeeze into that lower tax bracket to move into a Roth IRA? So we're working with clients to help take advantage of some of those areas. So having a tax-free asset for you or your heirs down the road is a big motivational tool for some folks right now. The hottest topic on the screen is probably PPP loans. I'm sure we've all had a lot of chats about those this year. Well, I think a lot of people are learning, Don, a little bit about the tax impact of these as well, too. I will say, first of all, in the PPP loans, I think it was good to get this out when we had such the slowdown or shutdown there. I think this is what's really going to, hopefully, when we get past all this pandemic stuff here, to make sure that this was probably one of the key tools that probably helped a lot of business owners really keep moving forward. A lot of folks I work with took these loans, got through the hard times, and are really starting to come out of it here. So that's the ultimate goal there. But Donna, I'll maybe ask you the ultimate tax impact of that. I think a lot of people are opening their eyes now as we're talking about year-end tax planning and learning what that looks like.
We'll talk about uncertainty. Like, all I really want for Christmas is to know how this one thing is ever going to work.
Yeah.
The PPP loans, which are so wonderful for businesses, have just been the biggest topic in 2020. And so now we're in a phase where the time period has run out and people are applying for forgiveness, which is hard in itself. And we're going to see a lot of forgiveness in 2020. We're going to see some tailing forgiveness in 2021 as people apply for these things. It's about a 90-day process to get the forgiveness. So here we're at the end of the year, and these things are all in the works. Everybody's excited about seeking full forgiveness. And then you have the IRS that has come in and said, hey, since this loan was not taxable coming in, those wages that you paid with the money are not going to be expenses for us going out. Well, stop. That's a backdoor way to tax this money. And we have 5 senators, bipartisan senators, that have said, that was not the intent. Time out. We've got to fix this with legislation. Well, where legislation has been parked, for the last couple months, right? We had some bills proposed that didn't get through the Senate. And anyway, now we've got a situation where we don't expect legislation unless it's an emergency situation to go through our Congress before the president-elect is sworn in. So we may be waiting till February for this answer, to be honest. I think a lot of tax professionals feel like there's still a solid ground that this won't be taxed. This won't be a tax issue. But right now, you've got to know that realistically, there's an outside chance it could be a tax situation. So something we're monitoring and hoping for that kind of legislation that clarifies it completely.
Thanks, Donna. And absolutely, that'll dovetail into all the tax bracket management pieces I just talked about a second ago, too. So we'll have a lot of things to be looking at, like you said, this year and probably next year. The other thing the last bullet point on the screen here is state tax planning. The state tax planning really has not been in focus over the last few years here. With the exemptions as high as they are, people have said, I'm fine, I'm not worried about that. Well, newsflash now is that we're looking at possible exemptions getting lower. So what does all that mean? That means that we really need to take a good hard look at what your total assets are added up all together. And a lot of clients, I think, will be surprised down the road here that they may be actually exposed to a state tax. And how that all works is after you and your spouse have passed on, the remaining assets above those exemptions are taxed at a very high rate. Again, I won't quote rates today because we'll see what all that looks like as we go forward. But I think we're going to need to really hit that reset button on this area for planning for clients to make sure that, hey, should we be doing some different things? One topic that comes up is the basis in your assets. That's what you actually paid for them and you own them for. But when you go and you pass on, a lot of times you get a step up in basis, and that may go away in the future too. And that's a scary thing too, because a lot of beneficiaries enjoy having those assets basically tax free. So if that goes away, we have to do what we call a lot of basis planning. We may look at doing some different movements there with businesses or investment holdings. There's a lot of different things to be thinking about there. So should we sell it now and just tax that out now and basically get it to a point where we step it up ourselves? So we got a lot of homework to look at in that area with that. So that's a big change there, possibly there. The other thing is usually we don't see this, but Congress could retro back some of these changes too. And what I mean by that is going backward and saying, hey, you did all this gifting, we're not going to allow that anymore. That's a pretty extreme measure there, but it has been floated out there in just different documents and things that I've read as well too. So from an estate tax perspective there, yeah, it's a tax that's well down the road for most people listening to this. But at the end of the day, we really got to be looking at some different things. There's a lot of strategies to do gifting, charitable. Those are a lot of things I've been doing here lately with clients, looking at different strategies within that arena too. So again, at the end of the day, go back to the common theme, planning always wins. That's what we need to be doing here. We'll be having a lot of planning discussions I can foresee here in 2021, very early in the year versus, I would say, don't wait till the end of the year. So don't wait till the last quarter and expect to hurry up and run and get all these things done. Some of these things do take some time to look at, evaluate, make decisions on there from that aspect. So from that action, from all those pieces there, I'll look back to Joe for any comments you have there, Joe, as we talk with clients and ultimately your thoughts there as we look at the plans here.
Wow. Thank you, Scott and Donna, for those timely insights. Such an unusual year, such an unusual time. Now, due to what we've learned in this year of 2020, and perhaps more than any other, is the time to reevaluate not only your short-term tax and financial plan for the year end, but much more importantly, your long-term plans. In presenting this today, our desire is that this brief discussion has given you pause to think about what is most important to you when it comes to your financial plan. And if that happens to be the case, we have the team ready at Coker James to review, adjust, and build with you that plan. And if you will please show our final slide, that'll give you the contact information to be able to reach out to us. And we look forward to hearing from you with any questions or any ways that we can help you reach and achieve your goals. Donna and Scott, any final thoughts or comments before we wrap up?
I have one. I always love year-end planning for our clients. Being a tax advisor is so critical in times like these, but it is just amplified when we're able to partner with somebody like Scott at HK Financial. Even as recently as yesterday afternoon, we had a client that needed both of us quickly, and we responded, helped him out. It was a big bonus situation for year end, and just when you have both of us working in unison, I'm just spoiled. It's just a fabulous team, and it's the best way to add value.
Thanks, Donna. Yeah, that was awesome to get that done quickly yesterday for that client. Again, year end's approaching. We had to get to him quick. The last comment I'll say is that as you're thinking and looking at these things, if you have questions, please reach out. We're happy to have a chat with you on your situation, just to help you kind of look at some things there. And if we can help you further, that'd be great. We'd love to have that opportunity. So with all that said, appreciate everybody attending today. Donna and Joe, thank you as always for jumping on these webinars. We look forward to doing more in the future for folks there, and happy to provide education for everybody as we try to figure out this new landscape.
Thank you, Scott and Donna, for your insights and for sharing this information today. We hope this has been of some benefit to you, and if so, please let us know. We look forward to having the opportunity to speak with you, and we hope you have a wonderful rest of your week. Goodbye.